To talk more about the U.S. Federal Reserve's next moves, I want to bring in Nicholas Economides. Nicholas is an economics professor at New York University's Stern School of Business. Good to have you with us.
Thank you.
Well, I want to start with the U.S. Federal Reserve, as we mentioned, is expected to raise interest rates this week by 0.25%. Let's talk about the basics. Why this move now, and what do you think about this particular hike we're expecting from the Fed?
Well, there has been inflation in the United States even before the Ukrainian invasion, the invasion of Ukraine. Even before that, there was inflation, and that was because of overspending. The federal government stimulus package was much larger than it should have been, created too much demand. The production didn't increase that much, and that created inflation. And that, for the first time, the Federal Reserve said this inflation is not transitory, and therefore we have to take action. And the action we have to take is to increase interest rates. So that's more or less where we were before the Ukrainian invasion, the Russian-Ukrainian invasion. So I think, though, that the situation in Ukraine and Russia means that there are going to be inflationary pressures now from the supply side. The previous situation were inflationary pressures from the demand side. Now there could be inflationary pressures on the supply side, difficult and complicated supply problems, even on essential food stuff like corn and wheat. So I think under the circumstances, the Federal Reserve will try to make the increase as low as possible. Probably 25, probably 0.25, 25 basis points, but we will see. I think that also the Federal Reserve will have to convey that it's not going to be as aggressive as it outlined before the Ukraine problem. And that's something important. I think the markets expect that the Fed will be lighter in its interventions because of the worldwide geopolitical situations and risks.
If the Fed does go forward with this 0.25%, how much of an impact will this hike have on the U.S., particularly as we're dealing with oil and energy costs spiking and this continued uncertainty about the Ukraine conflict?
Well, as far as the stock market is concerned, this is fully anticipated, so it will not have any impact whatsoever. Also, the mortgages, mortgage rates, and so on have already anticipated and factored that in. I'm not completely sure how much impact it will have right away on borrowing, but over time, let's say 6 months, a year from now, companies will have higher borrowing costs, and this will slow down to some extent the U.S. economy. But right now, keep in mind, we're facing a completely unprecedented geopolitical crisis. Nobody really knows how this is going to end, and we have no idea. And that's why there is a lot of uncertainty, and in the face of that uncertainty, it will be prudent for the Federal Reserve to be as light in its interventions as possible.
I want to expand it out globally about the impact of this rate hike on global markets, international markets, particularly when it comes to the tech sector. Can you talk about that?
Well, the tech sector is going to do well no matter what, I think. I think that especially companies that have a very strong market share, such as Google, Facebook, companies that have very high profitability, such as Apple and Amazon, they are not going to be losers in this kind of in the long run. I mean, even in the next 6 months, I would expect that they would perform better than banking stocks, for example. I'm confident in their abilities. Now, they're going to lose the market of Russia because of sanctions, but the market of Russia is relatively limited. So it won't make a big difference there. The ultimate question would be whether the US will enter a recession or not. And that's why we have to be, the Fed has to be careful, to have a very light touch. So together with the geopolitical mess, there is not too much risk in the business sector, so that we would not get into a recession. So that's kind of important, and it's very important to understand that the world has changed when this big geopolitical risk was added to the normal risks that we had before.
Really quick question, talking about the European Central Bank, reports seem to indicate it may raise its key interest rate before the end of the year. Do you think that's likely?
I think the European Central Bank will be even lighter in its touch than the Fed. I don't think they're going to do serious increases in interest rates.
All right, Nicholas Economides, economics professor at NYU's Stern School of Business.